Hello from Cboe Global Markets. I'm Kevin Davitt, and this is Vol 411 for Thursday, August 22nd. This morning, the S&P 500 moved back toward the high end of the recent range. That's around 2940. It's since fallen back to 2905. The VIX index declined to 1575, tested its 50-day moving average, and then rallied to 1720. That was the lowest level for the VIX index since August 1st. That's following the release of the minutes from the last Fed meeting, which, given the language specifically referencing a mid-cycle adjustment, could have been construed as somewhat hawkish. Nevertheless, Fed fund futures now indicate a 95% probability of another 25 basis point cut at the September 18th Fed meeting. SEP VIX futures will expire the morning of the next Fed meeting. There are weekly VIX futures and options for those interested in positioning more short term. Now, interestingly, 20-day realized vol in the SPX is at the highest level since late last year. The S&Ps have closed with moves of at least one standard deviation 10 of the last 13 sessions. So this combination is fairly unusual. The SPX options were pricing in 1 month forward vol at a discount to 20-day historical. Also, yesterday in the SPX, nearly 2.9 puts traded for every one call. That's the most put-skewed activity in the index in over a year. In early VIX options trading activity today, it looks like a customer sold a considerable number of September upside calls, specifically the SEP 37 half calls, more than 10K, the SEP 42 half calls, more than 26,000, and the SEP 45 calls, 13,000 times there. On the horizon is Chairman Powell's speech at Jackson Hole. That's tomorrow morning. And lastly, a very happy belated birthday to my awesome younger sister. That's Vol 411. Thanks for tuning in.